Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. And before taking a look at the charts, though, wanted to let you know of a special offer from our partner here, EURFX. If you join, you can get 3 months of ECS Live and also 3 months of SWAT access plus extra deposit from EURFX. So check it out in the link below of this video. Let's take a look at the euro dollar and pound dollar. Alrighty, euro dollar is moving to the upside and confirming our bullish analysis and bias that we thought that this is going up. And that happens when price goes sideways this long like this. Typically, if it then approaches the resistance for the fifth or sixth, fourth, sixth time, it tends to break. So this was attempt number 1, 2, 3, 4, 5, and up it went. Finally, that breakout because price went sideways. There was basically no selling pressure here to push it lower. If we look at the 4-hour chart, we had momentum to the upside. Yes, the trend was down, but momentum was up. And then we had a consolidation zone like that. So that typically then indicates an upside continuation. Unless, of course, the bears were able to drive through the support. So if you saw my wave analysis, that's why I mentioned that the bulls need to break above 110 and need to control, defend 109.50. And that's what happened here when price made that dip. There was a serious bounce here, bullish price action candlestick pattern, and then a correction and then a continuation as classical as we can get here for upside. So I think the target 110.50 probably could even go up to 110.75, 111. Depends a little bit on what kind of momentum is in this candle and how much the bulls are able to control the break above 110. And all these fractals and the break above the 143 May. But very key level, very key break. So I think there could be space to at least 110.50, if not even up to that 111 as I mentioned. That could complete 5 waves up for wave A. And that could be maybe a bigger retracement coming up than wave A like that. I would expect ABC down and then another 5 wave up, for instance, to complete the wave C in the 112.50 zone perhaps. All right, so we're getting a bigger bounce on the euro dollar. And if we look at this weekly chart, let's put the fib from here to here. Looks like price was very close to the 78.6 fib. It missed it by a little bit. So I'm not sure if that is a hit or not already. Actually, that I think will still have to be seen. It could be that after the ABC, price still makes it down, move to the 78.6 fib. This channel was pretty good and was pretty steep after this mild correction here. But at this moment, looking at price action, I think a move up to 112.50, now that price is breaking above 110, seems likely to me in looking at this daily chart. I think that depending on this daily candle, for instance, of course, that will indicate how much momentum there is in this kind of breakout that we're looking at right now. If it moves up, but today, at the end of the day, there's a wick, then that could be it. That could be all the upside. There was an intraday push, 5 waves completed, but wave A already started in the same breath. And then I would expect to bounce up for wave B and then move down for wave C, and then an upside again. Okay. However, if the daily candle holds, then there could be even one more push up. There could be some momentum, flag, and then one more higher high up to 111. Okay, so that depends. This could be then 1, 2, 3, 4, 5 within that 5 of A. Whereas if the day moves up like this, but then falls very quickly, and at the end of the day there's a wick on top of the candle, then I'm looking for ABC down. That would be invalidated. All of this would be invalidated if price from this zone really starts to fall a lot like that, and then a bear flag. Well, then that would dramatically change things, and I would not be looking anymore for that upside. All right. So if there is a wave A, it shouldn't fall too deeply. Let's say if I put a fib from here to here, and price hits this level, then the wave A should go maybe back to 110, but then it should bounce. It shouldn't fall much below 110, 109.80. Otherwise, it's probably not a wave A anymore, and something else could be going on, and it could be maybe a bigger downside coming up. So if it is a wave A, it should bounce at 110, then go up, then go down to 109.50, and then go up again. All right. So let's see. If the bulls keep control throughout the day, and then there's a flag throughout the night, then tomorrow there should be, I think, one more push higher. Pound dollar is, let's take a look at the 4-hour chart. It was very clear, very nice to trade in this parts where we had clear uptrend and trading it nicely to the upside. Then this seemed a very good reversal spot. Then here up, then here down again. All of that worked very nicely. But price has been a little bit more choppy in this zone, a little bit more difficult to read. This was a clear ABC. The upside made sense too, although it didn't go as high as I thought it would. Then I was expecting ABC like this, but then it bounced, which never happened. In fact, it was a deeper correction. So mostly pretty spot on, except this this spot right here, where price broke through the support actually instead of bouncing higher. So there was a breakout, double bottom though, and now moving up again. A little bit tricky, I think, for the moment. I think ABC down, ABC up, ABC down finished. So it could be WX, complex correction, WXY finished. And looking at this bullish candle and the current price action and the euro-dollar moving up, it might be ready for an upside too. I think I would still be a little bit cautious on the pound. I think I would need to see price show some momentum, basically break through the 144 EMA, make a flag there, and then continue higher before I'm really looking to trade it. If it does break through this bottom, let me go to the daily chart. If it goes through this double bottom here, then it could fall further. Let's put the fib back on, and it can go down to the 78.6 fib at 120.90, which I think would be a bouncing spot as well. At the moment, it's testing the 61.8 fib at 122, as you can see. And so far, that has been being used as a bouncing spot, a reaction spot. But I wouldn't want to trade it right now. If it falls, good to trade in my view on the hourly chart, break, flag, continuation after the flag, down to 78.6 fib, or look for or a bounce at 78.6 fib for upside. Whereas upside, I would need to see price show momentum, a flag, and then continuation. I need to see a break above the 144 EMA. Otherwise, this could just be an ABC correction, and it could still be a bounce. So I'm cautious in this zone. I'm cautious above 122, between 122 and 122. What is this? 80-ish here. This area, 122.75, 122.90, 122.70, 122.90. And of course, the support at 122. There, it's kind of neutral, above bullish, below bearish, and upside. I think price could go to. Let's get rid of this fib. Put the fib from here to here, and I think it could go up to the 61.8 fib, 124.33. Maybe the 78.6 fib at 125. Maybe even beyond that. But those will be the targets at the first spot, or the first kind of idea I have for upside. All right, so if you're interested in more about my method, ecs.SWAT, it's more than just waves. It's about patterns as well. There's a SWAT book coming out, and if you join now, you'll get that book for free as part of the membership. You also will be getting soon a new course, new strategies, all of that coming up in the next months. So join now before that, so that you're already ready for receiving that. In any case, wish you all good trading and see you in the next video. Cheers. Bye-bye.